The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Wednesday morning, just after 9 a.m. Eastern time, we got markets in lower territory, just off the lows that we had yesterday, as you had the missiles in Poland sent the markets from a price point of about 4,016 down to 3,970. We make it back right to that area, and what have we done, folks? We've given up about 30 points in the S&Ps just over about the last 3.5 to 4 hours as markets trade lower. See a little bit of volatility right now in those numbers at 3986. NASDAQ 100, we're negative by 65 points, 11,839 right now. You have the Dow off 54 points. You have the Russell negative by 7. Bitcoin, 16,155. I was saying it yesterday, folks. I would be out of Bitcoin right now. It makes absolutely no sense to me when you take a look at Bitcoin that this is what the chart looks like when the entire industry is falling apart with one of the biggest exchanges. Now, Binance is by far the biggest exchange, okay? They are doing a lot more volume. We're doing a lot more volume, we'll now say, than FTX. But, folks, it's going to reverberate around the entire crypto industry. And there's no reason why 16,000 down from, 17 or 18,000. There's no way that that makes sense in my mind in terms of that's the calibration of a price of a Bitcoin when you have one of the biggest exchanges out there. I mean, look at the chart of Ethereum, all right? We're not, I heard my dad saying yesterday, we're going to try and stay away from Bitcoin. We can't stay away from Bitcoin. It's very tough. Look at this chart of Ethereum. Does this look like what you'd think the chart looks like with FTX becoming a Ponzi scheme just last week? No, folks, that does not look like what a chart might look like in your mind. If you see that happen, pay attention to it, use some common sense. We jump back to crude on a 15-minute basis. Crude trading lower, down about $2 from where we were just prior to 8 a.m. this morning. Volatility continuing in crude. We jump over to the dollar index, as that's impacting everything right now. A little bit of movement in the dollar, as in we get a little higher price. Yesterday, we had quite a resurgence from 105.34 up to 107. We're at 106.24 right now in the dollar index, and we jump to notes. Well, let's jump to gold first. Gold up a bit, pushing 1782, and we jump to notes and bonds, and we're pushing highs right now, which is remarkable considering what the market's done. And meanwhile, we have higher price and lower yield as risk off and into fixed asset was the trend yesterday. You see that spike. I think that was it right there, right? Yeah, there's your spike on the news of the missiles, and we're actually above that price point now. Pretty interesting, right? On the 10-year. All right, let's jump over to the volatility index. VIX, there's a spike for you with possible war breaking out. Up to 26, and just like that by 3 o'clock, man, we get back to 24. We're up a bit. We jump over to the headlines, and before we get to Target, that's the headline this morning. So NATO and Poland see no intentional Russian strike as crisis eases. So that's the headline out there. But this is how bad things can happen, folks, when you look at it to that degree. I said some sound playing. Our preliminary analysis suggests the incident was likely caused by a Ukrainian air defense missile fired to defend Ukrainian territory against Russian cruise missile attacks. Nonetheless, folks, you have people dead, okay? That was the story out there. Unlikely to invoke Article 4, but anytime you got missiles flying and people dying, man, tensions rising, to say the least. The findings diffuse what looked to be a significant escalation in the conflict. Yeah, if you got Russian missiles flying to NATO countries, that would be an escalation. That's the biggest fear right now for the globe. The Ukrainians want the NATO to come into things, but on a global basis, that is the biggest fear. We saw it play out, and I'm surprised things de-escalated so quickly, because no matter what you say out there, of course they want things to de-escalate. There's almost an incentive to put that out there immediately to diffuse a possible nuclear war with Russia as far as it goes. But nonetheless, you got the VIX pairing all of that back to 24 like it's nothing. And right now, we're sitting right now at 24.66. Okay, let's jump around to some of the action this morning. We'll jump over to Target. Talk about a wipeout, man. $30 to the downside. Yeah. Now, this stock, folks, $15 move in either direction. And guess what? $30 to the downside on Target numbers. You see their pop on Tuesday with Walmart numbers. I was joking with our man Kevin Hincks. We'll talk to him after the break. Coming up after this break in a few minutes. But always tough when you go second. And man, it had to be tough in the C-suite at Target when they saw Walmart come out and crush it. And they knew that 24 hours from then, they were going to come out and drop the ball and they were going to pay the price. You knew it was going to happen, man, if you were in there. And that is what happened. And we get over to the numbers on Target. Profit decline and warns of a soft holiday quarter. They plan to cut up to $3 billion in total costs, over the next 3 years as they look to save money. Earnings, $1.54 versus $2.13. And revenue, they barely come in line. Now, Walmart beat their revenue line by like $5 billion. Yeah. Target, they barely come in line. They miss on the earnings. Echoing the theme of its competitors, strained by higher prices for groceries, etc. People are spending less on discretionary merchandise too. Yeah, Walmart spoke about that in terms of differing practices of what people are purchasing. So let's inventory here. Made progress in clearing through much of its excess merchandise. Inventory up about 14% year over year. Not bad. Is that Walmart numbers or is that Target? Because that seems pretty close. Maybe they're tying the two together here because those are pretty close to Walmart numbers. Yeah, okay. Comp sales rose 2.7% year over year. Market was looking for 2.2, but costs in Christmas, man. It's going to be interesting to see where this opens. As lower guidance, the company still expects eager holiday shoppers. But, man, Walmart talked about it, right? They're getting a lot of people. 75% of their gain in market share yesterday for Walmart was for people with an average income of $100,000 or more. So you're pulling in people that are traditionally high earners, but with inflation, that's flocking to it. And I would argue that Target does not have the price presence that Walmart does in terms of you think about Walmart, you're pretty certain that you're getting the best deal or that or thereabouts. Target's got some pretty expensive stuff in the store, man. And yes, it's a much better shopping experience. But in the economy we're coming into, this is going to be a problem as we're pushing down to 150 right now. And you're talking about recent lows of 140. Wipe out all the gains we had. We were just trading at a low of 145 back on October 10th. And we're going to wipe that out, man. We're going to open at about 150 for Target shares. And you see we're going to be pushing the recent lows for Target. You jump over to Walmart shares. They're back a bit, but just basically with the market, there's your drop off on the Target numbers. You're sitting at 146.15. Quite a day for Walmart yesterday, up $12 at the high. They closed the session up more than $10 for Walmart shares, and they're going to back off a bit this morning as we have a little bit of negative market action so far to kick things off with the S&Ps just under 4,000. We reach a high of 4,050 on that PPI number yesterday. Pretty interesting, right? You gave up the entire PPI boost. Now, market came into that PPI yesterday already positive, S&Ps by about 30 points. You gave it all up by 1 o'clock, and then you got the geopolitical risk came into things. We're sitting at 39.90. Stay tuned, folks. We'll be right back with our man, Kevin Hincks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P futures right now negative by 12 points, trading at 39.86. You get the NASDAQ 100 negative by 60. Dow futures right now off by 46. Let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, the TD Ameritrade Network right here on Tiger TV. Fast Market with your host, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network. They get some great guests, folks. They walk you through the day's lineup. They walk you through hypothetical trade setups. If you're looking to learn about options, they do hypothetical trades, usually 3 of them throughout the hour. I've learned a tremendous amount myself. Check out the program, and boy, we got a market for some defined risk right now. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, what a difference a day makes, huh, in terms of the news that we're getting. Yesterday, we were cheering about Walmart and their efforts to get inventories down and get to a good level. Today, a complete different story out of Target as they're cutting their fourth quarter outlook. A big miss in terms of earnings per share. Revenue actually beat slightly, but the warnings, Tommy, have this stock down significantly, not only giving up the gains from yesterday, then it went up in the concert with Walmart, but boy, Tommy, what an interesting turn of events. And kind of the same, in a way, with Home Depot and Lowe's today. Marvin Ellison putting out a very positive look at their sales and their growth in professional. So, normally when we look at professional customers, we only talk about Home Depot in terms of that. It's a much more do-it-yourself customer at Lowe's, but Marvin Ellison coming out saying Lowe's professional segment growing 19%. Pretty interesting news here. So lots of great things coming out. We got some economic data, really strong retail sales data, and mortgage apps. So a lot of things going on today, Tommy, as we get ready for NVIDIA after the bell today.
And what did you think about the geopolitical risk yesterday, Kevin? Things seemed to be simmering this morning. I was kind of interested to see how the VIX, no matter what happened there, missiles flying, it looks to be some deaths. That's, of course, how things can escalate. Spikes to 26, the VIX back to 24 by about 3 p.m. Eastern time last night. We're up a bit this morning, but pretty interesting to see how things spiked a bit and then they tame. What's your general take on the market and kind of the risk it's assessing or not assessing on some of what's going on, like we saw yesterday, where it can just, boom, poke its head out of nowhere?
Tommy, if you were watching the markets closely, as I was, and I do every day, you saw the put implied volatility jump midday, right when those rumors started coming out about a missile flying into Poland. Not sure where it came from or how it got there, but boy, implied volatility jumped. And a lot of little puts that were very little numbers, they all jumped. So you can see the sensitivity. Tommy, when you're talking about war and you're talking about borders, there's so many little things that can happen. Now it's turning out it might have been a Ukrainian missile that went into Poland. So, tensions should not be ignored. Traders, people in general, they get uncomfortable with a situation, and then over time they get less uncomfortable. I think that's the case here with the war in Ukraine. And so at any moment, things can break bad. You always have to have one eye on what's going on with geopolitical risks and their effects on the market. So, yeah, it's real, and I saw it in the implied volatility of the puts yesterday, Tommy.
I mean, it was pretty wild, man, how fast things move, and rightfully so, because things can change, as we've all seen. Living through those markets a couple of years ago, man, I think we all got a lesson. I got a lesson, at least, in terms of, boy, things move pretty quickly as news breaks. War, especially, we saw yesterday. And yeah, defined risk, Kevin. That's why we love options sometimes, man, because sometimes, folks, make sure that you're comfortable with the risks you're taking, okay? And one of those risks is, you saw yesterday, there could be an escalation. Are you positioned correctly? If you're not, maybe you take some hedges, maybe you put some defined risk trades to hedge some of those positions and whatnot. Kevin, you talked about one of the stocks that you may be talking about today as we got earnings coming up in NVIDIA, but what are you guys talking about on Fast Market at 12 today?
NVIDIA will lead off the show, Tommy, with a look at that. And then we'll look at Alibaba in the third segment. But in the middle, when Folio does something like this, they're coming to us with a name called company with footwear and sports apparel. And when they come to us with their own name that they're looking at something, it's usually some really interesting data that they have on this company. So I'm fascinated to see what they come with in terms of data on holding. The stock letters are ONON on this name. So it's always interesting when Folio comes with a name that you don't see every day.
Always interested, man. You guys have a great discussion. I got the chart up on the Thinkorswim platform. A little bit of volatility on 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 holding. Right now, 1950, up from 1632 last week. And before I let you go, Kevin, give us a little tease of BABA, because that's a little geopolitical as well. China just gotten hammered, man. But Alibaba, I got the chart up on the Thinkorswim platform at about $80, up from 64 less than a week ago. What's your take on some of the Chinese stocks in Alibaba right now?
Well, these stocks have, as you know, Tommy, have been virtually untradeable in our markets as the volatility out of, let's face it, in all honesty, a communist country that can impose rules and laws at the drop of a hat that change these companies. And you've seen it in all these Chinese companies that trade in the U.S., like Alibaba, like Baidu, like Tencent, like JD.com. All these names and the price movement. Now, these stocks have rallied out of what? Some news that there's speculation on some lightening of some of the zero COVID policies in China. Some of these stocks have rallied. Are they worth getting into or worth trading, or maybe trading from a bullish or bearish perspective? We're going to talk through that today as BABA comes out with earnings before the open tomorrow morning, and we'll see the effects of that, Tommy. But are these stocks tradable? Yes. Do you want to invest in them? Well, maybe now that they've corrected so much, they're worth looking at. We'll certainly take a look at them today.
If you liked Alibaba at 300 or 200 or 100, then you might like it even better at $79, man, right now. Pretty interesting. And what do you think of the zero COVID, Kevin? Because this one is a more complex discussion, obviously, and nobody has the answers in terms of China. And I agree that they're trying to, at least it looks like, correct some of the decimation in some of those stocks with some of the 16-point plan for real estate, easing COVID zero. But how does that work in your mind in a country that's pretty much been on lockdown, man? I was mentioning on my program yesterday, you know, they'd have 100 cases somewhere and they'd shut down a city of 22 million people, which is the size of the state of Florida. So how is that even possible? I can't write, you know, these are the gymnastics I do in my head, Kevin. How is that even possible? Is that even possible? Do you see that as something that's even achievable? I don't know how they get there, man. They've just been on such a lockdown for 2.5 years.
Well, speculation and reality are sometimes two different things, right? And so the volatility that's in these stocks and in those names, how are you going to get that? They have to change policy for something to change. Right now, Tommy, some of the speculation, think about this, was that they were going to release some of the, you know, lighten up some of the corrections and the all the problems there. And then they shut down Zhengzhou, the Apple plant, for a week, in the same week that the spec is talking about them loosening. So I think, personally, this is my personal opinion, Tommy, you be extremely careful with these names, because at the end of the day, you're trading a stock based in a communist country.
It's a great way to put it, man, and I agree, because I don't see how it kind of happens in the way that the biggest bulls out there, at least, are saying, in my mind. Kevin, I appreciate it as always, man. A great conversation. I'll be watching at 12, and we'll talk to you tomorrow, man.
Have a great day, Tommy.
You too. Folks, check it out. Fast Market 12 today. We'll be right back for the open.
Commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P futures down 18, NASDAQ 100. We opened down 100 points. We got some negative action right now with the Dow off 41. Bitcoin off about $500, 16,220. If you have any money anywhere and you can get it out of the crypto realm right now, folks, I would get it out. Very hard to find a buy anytime soon. My dad was emailing me or texting me last night about this one. This is the next one to fall, potentially. Genesis Lending Unit halts withdrawals in aftermath of XTX. Who is waiting, man? Who isn't withdrawing whatever money they have from whoever's holding it right now if it's in crypto, man? You know, it's November 16th, folks. This thing's been playing out for 8 days. Okay, you saw that even in FTX, right? The people who requested their money in FTX actually got it out first, which is crazy when you think about that it was a Ponzi scheme. But all you got to be is the first one out and not the last one out in a Ponzi scheme, and that's kind of what it's becoming right now. Genesis Global Capital at the end of the third quarter had more than $2.8 billion in total active loans. They are the lending arm of the bank, serves as an institutional client base. I mean, however they're threaded, folks. It's, you know, my dad was talking about yesterday, FTX, they went bankrupt along with like 120 entities. It's just a shell game left and right over here. And so don't think that it can't reverberate. The only reason that you don't have to worry in terms of even like a bank when this stuff used to happen is because it's FDIC insured. That's the whole reason for it, right? Otherwise, you had runs on banks that inherently crash the system because they don't keep all the capital in the system. Like I was saying to my dad yesterday, think about it. A bank is actually designed to take client funds, say that they're safe, and then lend them out. Well, if you're collateralized correctly, okay, that's not really a problem. But why do you think there's regulations, folks? Because people always play games with the collateralization. That's the kicker. If you play games with the collateralization, you can leverage that money full tilt, and we see what happens. As inevitably, it goes good until it doesn't go good, and then it crashes. So you got Genesis out here. They're pausing withdrawals. Very unfortunate if somehow you had money in there and you thought that, you know, it was safe. I would not sure how you get that. As they say, you can't keep a fool and his money from parting, folks. As in, what are you doing keeping money with anybody else as this thing's reverberating? All right, just pulled up different articles, and I did find this amusing. You got to talk about Elon in some capacity. So you have the trial going on for their Tesla pay. So he got a $55 billion pay deal to ensure, quote unquote, his tenacity for Tesla. I saw some quote yesterday saying that the board recognized that he was a serial entrepreneur and they wanted his attention focused on Tesla. Seems like they have every right to say that, and that's probably what's going to happen. It is kind of interesting that he's in front of a court right now arguing that his pay is warranted because his pay is warranted to keep his attention on Tesla, and meanwhile all he's doing is tweeting about Twitter. Kind of ironic that's how it plays out, because he still is the CEO of Tesla, folks. Okay, and I was saying this to friends yesterday. I mean, this started at about April, folks. Tesla is literally 50% of where it was at that time. It's at lows you haven't seen going back in a year and a half, and somehow he's just not catching flack, man. And I don't get it, because if I was a big investor in Tesla, I would imagine that I would want his attention paid to it, or would somebody else that was paying that attention to that regard. I mean, you look at the S&Ps, okay, so I get it. The S&Ps, you go back to that price point, are down about 11 or 12%, folks. He's down 50% Tesla shares, okay, over that time. So, but guess what? You know what? He probably wouldn't have led that company to that degree if he didn't get that type of pay package, because we see how he's acting right now, even with that pay package, in terms of his time diversified through SpaceX and now the adventures in Twitter. So quite the pay package they got for a public company when you talk about tens of billions of dollars. Not for the founder, not for his shares, for just actually being the CEO and chair at the time of Tesla shares, which is the difference there, folks. Okay, it's actually the pay package versus what he had as the founder. All right, let's see what else we had pulled up here. We talked about Target numbers, and Kevin referenced them. Lowe's reports revenue increase beating Wall Street's expectations. So this one's an interesting one, as he talked about the professional side of things, growing at, I think, 19% was the number. Earnings, they beat by 17 cents, $3.27. Revenue, they beat as well, up 3% compared with the same period a year ago. And there it is. Nope, that's not it. There it is. 19% growth in his professional segment. and that its do-it-yourself sales improved. Website sales grew 12%. They got a conference call that began at 9 o'clock in the morning. I've heard so Fast Market, folks, at 12 is an outstanding show. They are a sponsor, man, but I have learned so much from that show. If you're into options or want to be, folks, check it out. And they've had some great discussions talking about these two companies, Home Depot and Lowe's in particular, and I've listened to it. And I remember one thing they were talking about. It's a great point. So I don't know how Target's cracking the code here. But, boy, if they got that type of growth, maybe that's something that's going to reverberate, because Home Depot right now, okay, you jump over to the Analyze tab, you scroll down to the fundamentals, and you're talking about a company that's valued at $313 billion, okay? You jump over to Lowe's, just to put them in context, you're talking about a company valued at $133 billion. So it's about 3 times the size of the company, okay? And I say that because economies of scale, that's what Walmart does so well, which is why they can offer the deals they can so well. I remember learning about Walmart when I was in college. Now, they are not the company now that they were then, when they had full domination of retail at the time, right? Amazon was not the company it was in the early 2000s, et cetera. But at the time, the one thing that was very difficult for anybody to get on Walmart was that they had economies of scale that nobody else had. And if you got your product in Walmart, you needed your product in Walmart for it to be successful on a grand scale across American consumers in particular. And so what they did is that they basically would make contracts that said, you need to offer us this price at a price that you give it to nobody else, and we're not selling it. You could almost call the game rigged, and if they reach a point that they're monopolistic, it would be rigged, and that'd be illegal, okay? And it gets pretty close to that line. I'm sure they flirted it many times, right? I mean, they reached a level, but guess what? Technology, there was enough competitors there. You saw Amazon coming about, et cetera, Target in some capacity. But in the same way, Lowe's, in theory, should never be able to get to the level of professional, because just the economies of scale alone for Home Depot should allow them on a professional basis to at least be on the same price, if not lower. So if you are in that business and you go to Lowe's and they give you a price, you can be fairly certain you can probably get that price at Home Depot, because they're a bigger company that's doing more business. Now, I bring that all up because if they have 19% growth in the professional services, folks, and that's 19% growth in its professional segment, and it's that's an environment for real estate that's been a little tough right now, right? I mean, look at the stock and what they've done from 263 down to 180 a couple times. So look for a potential change there, man, because Lowe's, I like shopping at Lowe's as just a consumer. But if I was in professional services, you're not worried about shopping experience in professional services, folks. Usually you're just talking about price, right? Cost of goods, so that you can sell them and make more money. And that says a lot that they're coming into that, and whatever they're doing it right, man. As you got Lowe's up 2.2% on some strong numbers. You jump over to Home Depot, down about 1.7%. Market off about 0.3% right now, trading at $39.86. And we got Bitcoin down about $465. Stay tuned, folks. We got a lot to talk about. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the markets pretty much where we lifted off on the open. We have the S&Ps negative by 14. You have the Dow sneaking into the positive by 24 points right now. I'm looking at Restaurants International, QSR, the owners of Burger King. Their equity up 7% today. And yeah, they got a new chairman. So they announced Wednesday that it's hiring the former Domino's Pizza CEO Patrick Doyle as its executive chair. He's only 59 years old. And he was the CEO of Domino's from 2010 to 2018. And if you want to see what that chart looks like, folks, let's put it on a monthly. There's 2010 for you with Domino's at $8, and he left when it was at $300. So that's the reason why you're seeing quite an acceleration. Domino's Pizza, man, check that out, right? Let's see how QSR looks. Goes back to 2015. Nonetheless, today you're up by 7.3%. It catches a bid right on the open as well. And yeah, I would make sense because I saw that news. I said, hey, I mean, there's no denying what he did, man, in terms of the turnaround at Domino's. He made that company a complete digital powerhouse. He created the whole, what was the menu, right? They still do it, I think, where it shows you where the pizza is at a certain time. I mean, a very simple process. Now, back then, not so simple at all. I mean, he tied everything in terms of online ordering, online tracking, right? Track your pizza, etc. And in the time we're living in right now, man, yeah, that is something that needs to keep happening for some of these companies. You're seeing Chipotle. Some of the Chipotles are now having drive-throughs that are only available for pickup. You can't go there and order it, folks. Order it on your phone, like a normal individual in the year 2022. Don't pull up and try and order something. You better have that ordered already on your phone. That's where it's going, man. Starbucks was one of the ones that was early adopter as well with their online app, able to facilitate online ordering. Starbucks right now, just taking a look, this thing's had some trouble, but quite a rebound from $71, and we're coming right into the 618. Check that out for Starbucks. From about 120 almost to start the year, down to 70. We're back up to about 100. Dow catching a little bit of a bid right now. I mean, check out the Dow, man, pushing 34,000. I mean, folks, the Dow, we're just back to where we were to start off December. That is remarkable when you look at what we have gone through in terms of the Dow just being at what we were trading at in December of last year. Not so much the case for the NASDAQ, as the NASDAQ, yeah, you'd have to get up to about 15,000. You see the divergence with these growth stocks, down about 0.8% right now for the NASDAQ, and the Dow up by 45. All right, jumping around to what else I had pulled up here in terms of articles. We talked about Target, Walmart. Let's talk a little bit of mortgage rates. Sharp drop in mortgage rates does little to boost demand. Mortgage application rose 2.7 last week, folks. 6.9% or 7.1. Does it matter? No. It doesn't matter, right? It's 7%. That's what the mortgages rate, that's where your head thinks it's at. Nobody out there was waiting for the mortgage rate to come down to 6.9% when it was at 7.1. If you've made that decision to wait, you're probably waiting right now. And it's definitely not going to be something that's determined by the mortgage rate oscillating around 7% and in what way it falls. So you have it decreasing to 6.9 from 7.14. Now, this might see quite a decrease going forward, though, because we just had quite a drop-off in terms of the yields and where we're at. Taking a look at the 10-year, in terms of where we're at right now, 3.73%. Man, the yield on the 10-year. Let me just take a look for 1 second. Yeah, you're talking about, man. We were just sitting 1 week ago at 4.15%. These moves are just bonkers, man. So what is that? 28, 38, 43 basis points. 43 basis points in a week. The 10-year just went down. That's almost 0.5%. So you could see, I mean, you get to 5.5% or something like that, that's going to start hitting the payment to a certain degree. You're going to have your mortgage broker telling you, hey, listen, you know what? That 1.5% really just matters, not at about 7%. Points decreasing to 0.56 from 0.77, including the origination fee. Yeah, and applications, refinance falling. I mean, who hasn't refinanced, right, to that degree? So we sit around 7, and yeah, that's not going to really hit that market to any degree. All right, what else we got? Let's jump around to some of the FANG stocks as this market deteriorates a bit on the open. We jump around to Amazon. There's a give back, man. Amazon on the retail sales maybe down about 2.9% so far this morning. We got Microsoft catching a bid up by 0.2% on a tough day for the market so far. We jump over to the big dog Apple, off about 1%. Let's see how Tesla's trading right now. Tesla gives it back, down about 2.3% right now. I guess Elon, you can follow along live as he testifies for his pay trial. Guy's just always in the news in a big, big way. Yeah, and some of the quotes coming out, it's interesting. Let's take a look. The 5-year holding period was my biggest concern. It would mean I would need to run the company for another 5 years after vesting, or I would need to find somebody to run the company that would not cause the valuation to decline substantially. A lot can happen in 5 years. A lot can happen in 5 weeks, as we've shown with Twitter. But yeah, that's a real degree, and I imagine he's going to get that pay package. I mean, that's where corporate governance is important, folks, because it's tough to argue in terms of where Tesla was in the same degree at that time. I mean, Tesla is split so many times, man. It's split upon split upon split, right? But not so long ago, man. I mean, this stock was trading at tiddlywinks compared to what it's trading at right now. Post-split adjusted, but you're at $10 for a while, man. $10 to $20 before this thing took off to $400 post-split adjusted, which is just remarkable. Yeah. You talk about a give back. You talk about Fibonacci's, folks. Check that one out. Where are we at? Right at the 618 coming in. The 618, we got down to 177. The 618 is about 174. Also correlates to kind of the highs there that you had in the year 2020. But boy, look at that. I mean, he comes into the pandemic with Tesla at 17. It drives to $414. That one's going to be a Harvard case study for sure. But if you like Fibonacci's, and I do, man, keep your eye on that level at about 175 for Tesla shares. All right, let's jump around to some of the chip stocks. NVIDIA. How about the 786 give back? This one, man. This was one of the textbook cases, man. I heard NVIDIA. There are a lot of great analysts out there talking about, especially as you had this final push for NVIDIA where it went from 200 to 350. I'm paraphrasing, but I heard somebody saying it's going to take 111 years of profits or something like that to pay for the market cap of this company. You know, PEs get out of whack, right, to that degree. Well, we saw it, man, from 350 down to 109. We're trading about 160, back to a short-term time frame for NVIDIA shares. We're off at about 160 right now, off from the highs of 170 yesterday. You're off 3.8%. Now, I think MU guided down. Is that what I saw in the den earlier, potentially? Yeah, so MU's got some tough news for chips, potentially. Micron. They guide down. NVIDIA's got their numbers, I think, after the bell tonight. Is that what Kevin said? Let's jump around. November 16th, so they have their numbers after the bell tonight, $13.53, the market pricing in either direction. Put this on a little bit of a longer-term time frame chart. That's a weekly. Let's put it on a daily going back. Just for the run we've had lower. So we get a $13 price into this thing. Yeah, maybe it has the ability to run to 180, man, if you come in, but I don't know. Chips, the economy, S&P is now down by 20. I mean, folks, we're 70 points off of where we were trading yesterday morning at 4,050 following the PPI. Right? That was a decent PPI. We're now well below where we were at that price level, and we're actually coming into the lows when it looked like Russia was firing missiles into Poland. Watch out for this day. It might be a volatile one. Stay tuned, folks. One more segment. We'll be right back in 3 minutes.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps now off 23 points, back to a 5-minute chart. You see the decline on the open. We get a little bit of a pop, and then since then, we get to a price point of about $39.91, and the S&Ps have given up 17 points since then. You jump over to the Dow, barely in the negative, though, only by about 20 points. So the Dow basically flat. You get the NASDAQ 100 off 1.1%. Now, as we talked about, some of the growth stocks out there, Amazon off 2.6% right now. Microsoft was in the green, still in the green by about 0.1%, but Apple now off 1.2%. You jump over to Google shares off 0.2%. We jump over to Meta, Facebook off 2.7%. And one more I want to cover, a couple things before we wrap it up. Carnival, be careful in these cruise ships, folks. Carnival off 13.5% now. Percentages on small numbers, right, can sometimes be elevated because of the moves and how they represent larger percentages. But they're doing a $1 billion convertible debt offering, folks. Be careful as they leverage it up with some more debt. You put Carnival on a weekly going back. Pretty well-defined channel line. You're right in the middle of that area right now at 965. The upper boundary at about 1350. The lower boundary at about $5. And don't think it can't happen, folks. A month ago, you were at $6, and they just did a $1 billion convertible debt offering. And just think about it, folks. Cruising, I was joking yesterday. I saw something somewhere overseas that some cruise had 800 cases of COVID. And listen, I'm not living in fear of COVID, folks, but I'm not going on a cruise right now. Nope, not happening. Don't feel like doing that one, to say the least. And I imagine many others, which is a bummer. I'll get back there. Maybe I will, but not when I see headlines 800 people on a cruise, because that's just impacting your life no matter what, man. Okay? That is just impacting your life. We'll finish it up with retail sales. Values of purchases rose 1.3% in October. This was the number this morning. Biggest increase in 8 months. There's your number when they put it on the charts. So retail sales out this morning following the trend. But guess what? The market gives it back. The median estimate was looking for a number of 1. So decent numbers there. 9 of the 13 retail categories rose last month. The value of sales at gas stations, how about that? 4.1%. Yeah, higher prices in a big way. All right, folks, thanks so much for starting your day with me. We got negative action right now. Red across the board with the S&Ps off by 25. Stay tuned. Basil's up next, folks. Live programming all day at TFNN. I'll talk to you tomorrow morning. Stay tuned for Basil. Thanks, folks.